to say, yes. All right, guys, we're live. How's it going? Thank you guys for helping us out, helping our Town of Babylon residents out in this time of need. And what we're going to do is, all right, guys, we're hold on for a second. Sorry about that. So what we're going to go over is helping out our Town of Babylon residents in this time of need, which is a very serious situation for a lot of residents throughout the country. But we are here with our representatives from Long Island Housing Partnership. We'd like to thank you for helping and partnering with us in this initiative. First off, I wanted to thank the Town of Babylon Supervisor Richard Schaefer, Deputy Supervisor and Councilman Antonio Martinez, and the rest of the town board for presenting this and putting this forward. And also, I would like to introduce our panelists that will going into the information from Long Island Housing Partnership. Guys, please introduce yourselves.
Hi, how's everybody doing? Thank you for taking the time and joining this live webinar today. My name is Michelle Abreu. I am the Director of Counseling and a HUD Certified Counselor here at the Long Island Housing Partnership. We offer opportunities for first-time home buyers, for our homeowners, for rentals. We kind of do a little bit of everything. But our main concern today is to help those homeowners who might be having some difficulties with their mortgages or thinking they might have in the future due to not only COVID, just in general, financial distress they might be having. We are certified to help you and hopefully negotiate with your lenders, but we're here to provide the education and the support you might need. I work with another HUD certified counselor by the name of Maria Sands. She's right there. Maria, introduce yourself and let us know how long you've been doing this for.
Okay. My name is Maria Sands. I'm a HUD certified mortgage counselor, foreclosure prevention, and I've been doing this for the last 14 years. We've been doing pretty good here at the partnership. We get a lot of the percentage of the ones that we request. A lot of them have gotten approved. It's not that we have a magic one. It just happened that the ones that have gone through, the people were okay for it. And that's it.
Mm-hmm.
Well, I'd just like to thank you guys for helping us out in this evening, and hopefully people are educated and informed and empowered to make this decision of stopping foreclosure and helping them change this direction. So I would just like to make an announcement. If you are a participant and you are looking and you have questions, please allow our hosts to go through the presentation, and at the end of the presentation, they will be able to answer your questions in the comment section. All right, so guys, take it away.
All right, so I'm going to share my screen. Let me just bring up the presentation. All right, so this is going to be the virtual informational session for homeowners, and it's hosted by Town of Babylon Supervisor Richard Schaefer and Deputy Supervisor Councilman Antonio Martinez, and presented by us, the Long Island Housing Partnership. All right, so for many homeowners now, what you guys have been hearing a lot of is the CARES Act. The CARES Act is a federal law. It's called the Coronavirus Aid, Relief, and Economic Securities Act, hence CARES, which has put in place two protections for homeowners with federally backed mortgages. And it's important for our homeowners out there to understand that the CARES Act, it's really in place for those who have been affected financially or any which way economically because of the coronavirus, okay? So we wanted to educate you guys a little bit more on it, on how it works. Okay. So if your loan is federally backed and you are experiencing a medical or financial hardship caused by COVID-19, that makes you unable to make your mortgage payments. The main thing being unable to make those mortgage payments, you are eligible to receive a forbearance for up to 180 days. And then for an additional 180 days upon request. Okay. So in total, under the CARES Act, you are eligible to receive up to 12 months of forbearance if you continue, main word there is continue, to face financial hardship. Okay. The CARES Act forbearances may be available for periods shorter than 180 days, and we'll go a little bit deeper into that later on, such as 90 days with further extensions available upon request. Your loan servicer cannot add any fees, guys, or any additional interest other than the interest you already owe each month, which is part of your mortgage payment, to your account in connection with the CARES Act forbearance. Okay. However, if you haven't done so already, you must contact your loan servicer to request this forbearance. It is not an automatic thing. Now, we've been in this process already for about 6 months, if I'm not mistaken. So if you haven't asked for a forbearance and you just stop making your mortgage payments, then you are delinquent and you're being reported to the credit bureaus as delinquent. So it's important for you guys to understand, if you haven't done so, you must reach out to your servicer to request it. It's not automatic. And I stress that because some people thought it was automatic. You do not need to submit any documentation to qualify for this forbearance. All you have to do is let them know that you've been affected by COVID-19. Okay. If you do not have a federally backed loan, which according to statistics, 30% are not federally backed loan. My personal loan was not federally backed. For those that are not covered under the CARES Act, the loan servicer can grant a forbearance for up to 90 days to borrowers who request them, often with additional time available if needed. But servicers may also have different assistance options. So keep in mind, not every servicer out there is automatically going to give you everything that the ones that are government backed will give you. So some of you might just have 90 days of forbearance, and then you have to look at other workup options if your loan is not government backed. All right. Forbearance plans that are not required by the CARES Act may carry additional fees or interest charges. So you should request information about those details from your loan servicers. It's important to know the type of loan that you guys have, because that's going to determine how much time they're going to give you. A lot of the non-federal loan backed loans are mimicking the CARES Act, but not all of them are, and legally they don't have to. So keep that in mind.
A lot of the big banks are also doing it, like Chase, BOA, Wells Fargo. They are all getting in the cover whether it's a portfolio or not.
Yeah. So you really won't know until you reach out to them, or if you reach out to us and we can reach out to them on your behalf. But a lot of them, you can usually just log into your account online and request it right through there. Okay.
Yeah, there will be a link that says COVID-19. You just go on it, and you have been behind like maybe 3 months prior, you can still do it.
Yeah.
You can still do it. So don't think that because you didn't request this and you're already 3 months behind, you can't. No, you can still do it.
Yeah. So like Maria says, even if you were behind previously to COVID, you can still apply for this. Okay. So don't think just because you're already behind that you can't apply for this. You can, especially if you have a government backed loan. Okay. There is some foreclosure protection in place right now as well for those government backed loans. So for all mortgages, or a servicer may not initiate the foreclosure process until a mortgage is more than 120 days past due. So there's been an extension of the foreclosure and eviction moratorium in connection with the COVID-19 national emergency. It announced a third extension, giving it till the end of December of this year. Okay. So they cannot initiate foreclosure on your home until the end of the year if you have a federally backed loan. Okay. If you do not have a federally backed loan, you are not covered by the CARES Act. but you should determine whether your mortgage company is following this new extension. So we're going to stress throughout this whole entire presentation, if your loan is not federally backed, and we're going to be able to provide you the resources you need to find out if your loan is federally backed or not, so that you can look it up yourself, or you can just reach out to your servicer and they can let you know whether it's a government-backed loan or not. And we're going to also, in the next few slides, tell you what a government-backed loan is. Okay. So if servicers are not responsive or continue to be non-compliant, homeowners can contact the federal agency or entity that's backing their mortgage to seek out legal assistance. We have a great relationship with free legal services. Maria, what are they?
We have NILAC with New York Law Assistance Group. We have Nassau and Suffolk Law Services. We have Long Island Housing Services. Those are the three main ones that we have.
And when you reach out to us and you have a complaint or anything like that, Maria will try to get the whole story, see if it's something that she can work with or if something that we have to refer to legal. And those services are usually free of charge, right, Maria?
Yes, I just want to stress in something that we just talked about or that you talked about. It's that people about the foreclosure, how there's the moratorium. Now, the only thing is that the courts did open. They cannot foreclose on you. But if you already have been served prior to this, your uh, your judicial system is going to keep on going. That means that if you had a settlement court date and it was canceled because of COVID, it already open. So please keep in mind that you are going to either receive a letter or call. If you had an attorney, the attorney will let you know. But if you don't have an attorney, the courts are doing virtual, like by phone. They will call you on the phone and you will have your settlement court. And the same thing, if your case was already with a judge, it is going through. And that even if you did not have an attorney, you can reach out to us and then we'll put you in contact with an attorney that can start and help you with it.
Okay, guys, I just wanted to interject and ask this question because this is a concern for our aging population and on Long Island of fraud when it comes to this process. You know, going through, is it important to go through the institution, your financial institution that you already dealt with, or are there other options out there, and how to determine which are safe or not?
Well, we're a free option. It doesn't get better than that.
Always the best option.
Always the best option. You know, reaching out to a HUD certified counseling agency is the first step. If you're overwhelmed with the process, reach out to one of us, whether it's ourselves or any other agency on the island that's HUD certified. It is a free service that we provide, and we are educated and on top of what's going on right now. And if we can't help you because it's beyond us, if it's more legal, we're going to refer you to a free legal service that's going to help you. Once you're paying for something, I feel that that's when scams kind of start and people
no upfront fees at all.
Right.
So come to us first, come to a HUD certified counseling agency, get the free service, get the free education, get the free counseling. That way we can point you to the right people that can help you and won't take advantage of you.
Right. And you know, as we see, you know, everyone's moving towards a digital platform, and it's kind of hard to determine what's real, what's not. And, you know, that's very important that it's a free service, and, you know, hopefully people take advantage of this and hopefully save their homes, generational wealth.
And keep in mind, guys, if you are behind on your mortgage, that's public record, that's public knowledge. Companies can easily get access to your name and address. And they can make that letter look so personal, like they're trying to help you from the bottom of their hearts. The more personal it is, the more scammy it is to me.
And they can make it also look very legal.
Yeah.
Like it's a legal thing from an attorney or what? No. Always reach out to a HUD counseling agency and see what can be done about it. Do not answer any, nobody should call you and ask you for any kinds of documentation. And if anybody sends you a document, don't sign anything. Contact one of the hot counselors, because we be able to tell more or less, and nothing should really come from somebody that is not your lender or the attorney that's representing your lender. And by a lender, I'm also talking about the servicing company, because you could have an FHA mortgage and XYZ is the one that's servicing your loan.
Yeah. If you ever have any
Or
doubts,
pay your mortgage payment too. That's your servicer.
All right, I'll just let you guys go back.
so moving along. All right. So like I said, I wanted to go over with you guys who is eligible. Am I eligible for a payment release? Because a lot of people ask, am I even eligible? You know, do I fit the category? So the relief available depends on the type of loan you have. And I put here on top, which are the government-backed loans. Okay, so the Fannie Mae's, the Freddie Mac's, the FHA's, the reverse mortgages, the USDA. We really don't deal with the rural housing service here on Long Island, and the VA. These are all protected under the government-backed loans. These are all government-backed loans. So these automatically fall under the protections of the CARES Act. And like I said, if you don't know what your mortgage falls under, you can just call from when you get your mortgage bill every month, your statement, just call the number and ask, who holds my mortgage? Who is my mortgage governmentally backed? And they'll be able to tell you that right away. And at the end of the presentation, we're going to give you some lookup tools that you can actually just go in there, put in your information, and it'll tell you whether it's government backed or not. Okay.
Yes, because sometimes the servicer, Michelle, might, oh, we can't tell you who your investor is. Investor is whether it's a federal backed loan or if it's anybody else.
Yeah. So we're going to,
you want to make sure that you can go on that lookup tool and make sure that you can go see if it's Fannie, if it's a Freddie, if it's an FHA.
yeah. And those are going to be the,
you know, if you have a VA loan.
Yeah. You know, if you're a VA loan, because you have to be a veteran to get a VA loan. So we're going to give you those resources at the end. So don't worry, you know, you'll be able to look them up yourself if you can't get that answer when you call your servicer or lender. Okay. But like I said before, about 70% of these loans are federal backed loans. So you might be in good standing. But if it's not, a lot of the non-federal are following suit with what the CARES Act is doing. They're not obligated to do. So there's always a few that will not, but you won't know until you reach out. Okay. All right. So most importantly, we want to define what a forbearance is. Before the whole COVID hit and the coronavirus and the CARES Act, normally a forbearance was maybe you lost your job, but you're going to be getting a job soon. So it would halt your payments for up to 90 days. But with the understanding that once those 90 days ended, you were going to pay that lump sum. Okay. So, and you had to submit a whole bunch of paperwork for them to even give you a forbearance. With the whole pandemic, everything changed. The CARES Act came into play and the new forbearance was put out here. So in general, a forbearance is when your mortgage servicer or lender allows you to pause, suspend, or reduce your monthly mortgage payments for a limited period of time while you regain your financial footing. Okay. Forbearance does not mean that the payments are forgiven or erased. And that was a misconception for many. Okay, you still owe it. They're not going to give you a handout and say, hey, no worry, you can't pay it. We'll take the hit. It doesn't work that way.
Difference about forbearance or forgiveness.
Yeah.
There's no forgiveness.
There ain't no forgiveness here, guys. So make sure you understand how the forbearance will be repaid. Okay. When we were first calling, when this first all hit, and you call, they really didn't know what was going to be the end product. They didn't know at the end of those, everyone was asking what's going to happen at the end of the 90 days, because everyone feared that they would have to come up with a lump sum. So as we've been going through the months, this has all changed numerous times. Now there's more education, there's more guidance on what happens, and I'll go over that as well later on, of when the 90 days is up. Okay, Marcus, you had a question? No? Okay. So a forbearance, like I mentioned before, is not automatic. Okay. A borrower has to contact their mortgage company, whether it's you contacting them or whether you reach out to a HUD certified counseling agency to help contact on your behalf. You have to make that initial contact. You need to let them know. They don't know whether you're affected or not. They don't know whether you can make your mortgage payment. Just because you're not making that mortgage payment doesn't mean that you've been affected by Corona or COVID-19. So you need to let your servicer know that you've been financially affected. Okay. All right. Who should apply for forbearance? Okay. So for the forbearance, if you're facing a short-term financial hardship as a result of COVID-19, if you are concerned about falling behind on your mortgage payment because you've had a cut in hours, or a lot of people in the food industry, they're not working, there's only outdoor dining for some, if your income has gone down, unemployment for a lot of people, you were getting a good amount of money from unemployment, but that's been cut. So you might have not needed the help before because the unemployment you were receiving made up for it, for you not having your job. But now that unemployment has been cut, and you're back just getting that regular unemployment, not that additional 600, you can be falling behind now. So now it's the time to call. Okay, so your clock would start now if you've been paying on time this whole time. Okay, so if you already have missed one or two payments, now's the time to ask for that forbearance, guys, because the more you wait to contact them, now you don't have protection. There's no protection for you. If you're not formally in a forbearance under the CARES Act or in general, there's no protection. You're getting reported late to the credit bureaus. You're collecting fees. They're starting the foreclosure process, so you want to make sure that you, one, open up your mail. We have a lot of clients that are afraid to open up their mail. Okay, when they would come meet with Maria, they would bring envelopes of stuff that's unopened. And when Maria goes through it, there'll be sometimes a complaint in there that they should have answered, in 20 days that wasn't answered. So especially those that were behind.
Offering them some kind of forbearance or workout or something, at least reach out to them. The worst thing you can do is ignore or be afraid. And I know a lot of people ignore it because they are afraid. Don't be afraid.
Don't be afraid, guys.
Check. The phone doesn't bite.
Yeah.
Well, if I may add to that, there is a certain pride in homeownership, and that same pride now comes into effect of bringing you into jeopardy of losing that homeownership. So it's sometimes it's the pride in oneself that neglects to ask for help. So in certain communities, we're proud to be homeowners, but at the same time, that pride affects asking for help.
100%. And the best thing to remember is you're not alone. You're not alone. And the reason we're around is to help you, and we have the resources to help. But the sooner you ask for the help, the better the chances us that we'll be able to help you. Because if you wait too long because of your pride or whatever reason, you're actually putting yourself in a bigger hole than if you would have come in the beginning. And everything is confidential. We're not sharing your information with anybody. We're not posting your pictures, of success stories, only if you let us. But everything's confidential, and now with all these virtual things, it's just a phone call, where you don't even have to come into the office when you can't come into the office, so we're doing everything over the phone. So please don't let your pride, because the worst thing that can happen is if you let your pride get in the way, you lose your home that you worked so hard to get to begin with.
And so, as answering Marcus' questions about the pride, just remember, if you are 90 days behind, and they start doing something, it's already public knowledge. Yeah. So everybody that wants to check will know if you are in pre-foreclosure or not.
Neighbors, they're checking to see, because it's public record. So you want to avoid getting it, 90 days past due. That way it doesn't become public, and hopefully we can help you resolve the delinquency before it gets unresolvable. Is that a word? Unresolvable. Oh.
Sorry.
Sorry, Spanish is my first language. Yo hablo español.
Doing fine, doing fine.
That's another thing. We're bilingual here at the Long Island Housing Partnership. So if you need someone que habla español, we're your peoples.
And even if it is any other languages, we have a service that will be an interpreter. So no problem there neither.
Yeah. So if you think it's a language barrier, by all means, you let us know ahead of time before that we when we're scheduling the appointment, and we'll make sure we have the language line available for you so you can freely speak in your own native tongue, and it'll be translated for us, and we can communicate great. So no worries there. If you don't speak English or Spanish, we can provide you with the translation services needed the day of the appointment. We just need to know ahead of time. All right. All right, guys. How to ask for forbearance. All right. Like I said, it's not automatic. All right. You have to ask for the assistance. Okay. So you must contact your lender. So now in today's day and age, everything is through the computer. Okay. So when you try calling your lender, you might not get through because they might be overwhelmed. So if you are computer savvy, you just go on their website, and if myself, I pay my mortgage right online. If you have an account set up already, you can actually just go online, and it usually the first thing that pops up for a lot of these mortgage companies is, have you been affected by COVID? Just like your credit cards, if you needed some time because you lost your job through this process to stop your credit card payments, there's relief for that as well. All you have to do is log on to your account or give them a call, and they'll provide you some reprieve. So if you're not computer savvy, you can just contact your mortgager, okay? Or you can reach out to us and we can contact them on your behalf, okay? Find out which company services your mortgage. It's just a matter of looking at your statement that you receive every month, okay? And the phone number will be on there, or their website will be on there. Research to learn if your mortgage is backed by the federal government. Those links we're going to provide you guys at the end, so you can look up yourself whether or not it's a federally backed loan. Okay. If you can't find it on your own, or they'll let you know whether it is or not. Fannie Mae and Freddie Mac, who own or back close to 50% of the mortgages in the USA, also provide an online lookup tool, which is what we will be providing you with. Okay. Reach out to your mortgage lender or servicer to explain to them that you are experiencing a hardship with COVID-19. That way they can give you that forbearance right away. They're not going to ask for any additional paperwork. All right. Like I said, you could have been on time or you could have been behind already. You can call and get this forbearance. Okay. Automatically, whether it's federally back or not, they'll do 90 days. Okay. If it is federally back, you'll get more time. But at least it'll give you some time to get back on your feet if need be. Okay. All right. During the forbearance period. Okay, this is important, guys. Maria was stressing to our clients as they were going during the forbearance period, if to make sure you're keeping written documentation on hand. Okay. You also need to pay attention to your monthly mortgage statement to make sure that it's not accruing late fees, additional interest, that it's not being reported late to your credit bureau, that it's not being that you stopped the automatic deductions from your bank. All right. If you are in the forbearance, the first thing they usually tell you is if it was automatically coming out of your bank, we're going to put a stop to that. But if not, you better put a stop to it, because if not, they're going to keep taking it out. Okay. So that's important. All right. If they are reporting you late to the credit bureaus, that's against the law during this COVID-19 forbearance period under the CARES Act. So you need to report that and reach out to them right away. Okay, so that's very important. Other than that, if you can make a partial payment, make it. So let's say your mortgage is $2,000 for the month and you have $1,000, make that $1,000 payment. Because if you do not have a federally backed loan, a lump sum or a repayment plan might be your only option. So the less you owe, the better position you're in. Okay. And also, go ahead.
Well, a lot of times when you're making the partial payment, and even if just look at what your statement says, and you'll see what's your principal, what's your payment for your principal, what's your payment to the escrows. And it's a good law of thumb, rule of thumb, to pay even if it's a little bit to your escrow. And when you make that payment, say, this is for my escrow, or this is for my interest. That way, at the end of the forbearance period, the amount that you owe, it will be a lot less, and it will be a lot easier whether they're going to end up giving you a modification, they're going to give you a payment plan, whatever it is, it'll be a lot less money. And the less money it is, because let's face it, a lot of people have been going back to work, but not everybody's working the same amount of time. Not everybody in the household is working the same amount of time. So your income, yes, it's coming back, but it's not fully back. And it might never be fully back. We don't know. So the less you owe, the much better it is. So even if it's a little bit, let's say you can pay $300, that's the minimum. Say, all right, this is for my escrow.
Because if you don't pay
This one
anything,
is-
it starts adding up, guys. It starts adding up, and it might not be an option for you later. So if you can pay a portion, or it's going to be held in suspense most of the time, but it'll be applied. Okay. So you're not going to lose any of that money. You know, it will be applied.
Right. And I have a question now that you mentioned the escrow. Now, let's say if you don't pay the escrow and you add that to the forbearance on the back end, now, is the bank required to pay that or not to the municipality?
They're always going to pay your taxes. The lender's always going to pay taxes. They're gonna
Right.
pay taxes, and they're going to pay your homeowner's insurance if it's part of your mortgage payment.
So, being that the bank is paying it, and let's say I'm back in good standing, I got my job back, do they add those taxes to your back payment, or is that a separate payment back to the bank?
No. Usually, once they make the arrangement, let's say after the forbearance period, you were in a forbearance for 9 months. 9 months at $3,000, that's 20 something thousand.
Yeah.
So it's a lot of money. So what they do is they give you modification based in your interest, in your principal, but the escrows, they say, all right, you have the minus escrow of $3,000. They take that and they spread it out in certain amount of time. And they also ask you, this is what you owe. Do you want to pay it all at once, or if it is spread out, it's already included in this final payment that they're giving you, or they will tell you how much more it will increase the payment that they're offering you, so those escrows are included in there.
Right. And it's important to know that they have options,
Yes.
not
Yeah.
it's all or nothing.
Exactly.
Gotcha.
And I believe we have a slide that gives you what those options are, because I know a lot of people are getting towards the end of their forbearances, and they're scared about what their options might be. Because in the beginning, when I called my servicer in the beginning, because I wanted to see what they were offering, I have a non-government backed loan. So she said, oh, at the end of the 3 months, a lump sum will be due, or you can apply for modification. You know, and I'm like, well, no, I'll continue making my mortgage payments no matter what, you know, because I knew I wasn't going to have a lump sum. If I'm barely doing it now, I sure as heck am not going to have all that money to throw at them at the end. And I wasn't comfortable applying for modification, because to apply for modification, now you have to submit all your paperwork, and there's no guarantee, you know, that you will be modified. So I didn't want to take that risk. So I stuck to just making my mortgage payments. But other people, unfortunately, had no choice at that time but to take that 3 month forbearance, knowing in the end that maybe they might not have any other option but a lump sum. But now things have changed a little. So a lot of service, well, under the CARES Act, they automatically are going to review you for other options.
Gotcha.
And the ones
They
that are
will, under the CARES Act, the GSE mortgages, they will
Yes.
look you up for modification. Even if you had 2 or 3 before, they will. They're not gonna foreclose on you.
And
Or
if
you
gonna work,
have no income at all, things, things do happen. Unfortunately, the workouts are not always retention, but
yeah,
this is something people have to transition into and get educated on.
yeah. And that's what, that's it's gonna come a point to if the 12 months is over, you have a government backed loan, the 12 months is over, you still are not on your feet, you still can't afford, that's when you're going to have to look at other options. Because the bottom line is they can only help you so much. They can only modify you, put it in the end. But if you can't make that even if they lower your interest rate, let's say, and your mortgage went from 2000 to 1700, and you still don't have income to support it, at that time you are going to have to look at other options, whether it's to sell your home, or do a short sale if there's not equity. But we're going to try to avoid that as much as we can. We're going to try to do everything else first because those are last options that a homeowner is going to have. Okay.
Gotcha.
So getting back on during the forbearance period, all right. So once your income is restored, you need to contact your servicer because we've had clients that were in a 3 months forbearance, but 2 months in, their job said come back, and they started getting paid back in full. And they said, okay, I'm done. I don't need this forbearance anymore. Put me back to my regular payments. What do I need to do to work out, the 2 months I missed, and they were able to work something out that fit their financial income, that the income they were getting in. Okay, because the fewer payments you've missed means the less you're going to owe down the road, whether it's if they're going to put it at the end of the mortgage or anything, is less that you're going to have to owe. So once you are back to being able to make your full mortgage payments, please reach out to your loan your mortgage company, your servicer, and let them know you're back on your feet so you can stop having to owe at the end of whatever option they offer you. If you continue to receive some income that turns out to be more than you need for your bills, that's a time to start also putting away money. All right. Don't go shopping. Put it away, so that if you can save some money now, it'll help later on, if something happens again. Okay. Your property taxes and insurance should continue to be paid by your mortgage company. Okay. If you had an escrow account set up, which most usually do, usually the only time you don't have an escrow account set up is if you outright own your home. Okay. But most, if you have a mortgage, usually an escrow account is part of that, because if you don't pay your property taxes, they're real quick to come and get your house. All right. So the lender is always going to make sure those property taxes get paid, because they say before you take it, I'm going to take it. So make sure that if don't worry is my I'm sorry, I want to say, if you are in a forbearance, the lender is going to continue to pay your property taxes if it was included in your mortgage payment before, and they're going to continue paying the premium on your homeowner's insurance. So God forbid something happens with the house, rest assured you're still covered under your homeowner's insurance, and your property taxes are still getting paid through the lender. Okay, that won't stop just because you're in a forbearance or in any other type of workout. Okay.
Another
Oh,
thing I wanted to add up to that was that you start making some money, you do not have to tell them to stop your forbearance. You can make payments, and just because you start making payments, unless you tell them to stop the forbearance, doesn't have to stop. Just because you make payments, that doesn't cancel your forbearance agreement. Just make sure you know this. If they gave you a 6 months and you want to pay, I can pay this month, or maybe next month. Oh my God, next month is the kids' school, or whatever. Then wait, you don't have to request to be the end of the forbearance unless you are very, very sure you can start making your payments or it comes to an end.
because remember, you don't accrue any late fees when you're in a forbearance.
Mhm.
So you can make the payment on the 20th of the month. You covered the month. It's held in suspense. So it's going to be applied, but you didn't do any late fees. So it's kind of a cushion. So even though you're back at work, you probably are behind on other things, and you're probably doing a catch-up game right now. So don't get off that forbearance. Don't be quick to get off that forbearance if you're still playing catch-up, okay? Because you have that protection in place. Your credit is still protected. Your home is still protected. So it's giving you a little bit of time to get back on your feet and feel comfortable. So when the time comes to get off of it, you've caught up and you're good to go. All right. So like Maria said, don't be too quick just because they called you and they said, hey, you can come back to work tomorrow, because most likely you're going to be playing catch up for a little bit. Okay.
Right. Because as you know, we're in this environment when, today's Thursday and Friday could be another day.
Yeah.
And,
Exactly.
and everything changes by the day.
Yeah. So until you don't have a cushion again, that emergency fund,
Right.
take advantage of that forbearance. Okay. So most importantly, the question everyone asks is, what happens at the end of the forbearance? Dun, 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 dun. So we want to make sure you guys are educated on this process, because a lot of homeowners are not. So much has been going back and forth from the beginning of all this. We wanted to try to give you the most up-to-date information when it comes to what happens at the end of the forbearance, okay? Because a lot of people fought for these options to actually be available, okay? So payments missed during the forbearance are still owed, and I bolded that because I just want to make sure you know it's not a freebie, okay? You still owe it, but how you're going to pay it back is going to determine on what option is available to you, okay? You still have to pay it back, but when a forbearance period ends, you have to work with your loan servicer to arrange that repayment of the missed payments, okay? For federally backed loans, federal regulators have made it clear that your loan servicer cannot require a one-time full payment of the entire amount, which was the case when this first started. And that was a huge fear for everyone, okay? Because normal forbearance, yes, a lump sum was required. But under the CARES Act, they put in that protection that now that's not required because it just didn't make sense to ask for that.
You have a question. Now, you mentioned a normal forbearance versus the CARES Act forbearance. Now, I don't have a federally backed loan.
Mhm.
Do I get the normal forbearance program, or is it adjusted for this COVID time?
It's adjusted through the COVID time, yes.
Okay.
They're not going to ask you for any documentation to put you in the forbearance.
Got you.
That's really the only difference. And then most of them are following what the CARES Act, the federally backed loans are, but they're not obligated to.
Okay.
And they're not gonna extend it to a year or even the 9 months. No. So far, everything I have seen has been tops 3 months or 6 months.
So that's a one-shot deal.
Well, it could be 3 months and then another 3 months. That's
Oh,
it.
all right. Okay.
Those non-federal, the non-federal backed ones, the most they're doing is probably 6 months. And then at that time, if you don't have the lump sum, then you have to put in a full packet to apply for workout options, whether it's a repayment, whether it's a modification, whatever your income can now afford.
Gotcha.
So it is a little different. Okay.
Most of the time, they can, and more than likely, that's what they will do, whether it's federally backed or not. If you were on a forbearance for 6 months, they might extend your loan for those 6 months. Let's say you were in your 27th year, but now you did not pay for 6 months, so now they're gonna extend your mortgage to 27 and a half years.
Yeah. So that's what they're doing. If you can't afford to pay the lump sum, a lot of the non-federally backed loans will put it at the end of your mortgage or extend your mortgage. Whether they extend it or when you sell the house, you have to pay it. That's what a lot of them are doing, because in reality, they know it's going to cost them a lot more to try to foreclose on you. So they're working with you to hopefully either extend your loan terms for the amount of months you didn't pay, or put it like as a balloon payment at the end. So when you ever refinance your house or try to sell your house, you still have to owe those 6 months you didn't pay. So it's not forgiven. Nobody's forgiving nothing. But they are putting in the back because they don't want a repeat of what happened back, when was it, 2006? Was that when the bubble burst?
2008.
2008. Yeah.
There we go. So they're trying to avoid that at all means. So they are working with people. They are definitely working with people. They know there's no way you're going to come out with 6 months of payment in one shot. So a lot of them, just to make their lives easier, just as to help you in the process as well, it's probably more to make themselves easier, is extending the terms of your mortgage for those months you were in the forbearance.
Right. And a misconception that a lot of people have is that the bank wants their house. Not really. The bank is not in the business of owning homes. They are in the business of lending money. They don't want to lose money. And sometimes when they take a house away, they end up losing a lot of money.
A lot of money. Just think about it. Let's say you owe 400,000 on your house. The bank, you end up losing your home, and they can only sell it for 300,000. They just lost 100 grand plus all the legal fees plus everything else. They don't want that. They want to keep you in your home, so they're gonna work with you. And when you're using a HUD certified counseling agency to help you fight the fight, it usually works out. All right. So that's why we stress to you, if you are having difficulties or if you are in a forbearance, you don't know what the next steps are, reach out, ask for that help, because we can help you save your home, because just like Maria said, they don't want your house, so they're going to try to figure out anything else, any other workout before it gets to that. But if you have no income period, then of course we have to look at other options.
Right.
So over here, so we say your loan servicer will evaluate your situation at the end of the forbearance and offer one of the following options for repayment. Okay. So if you can afford it, hence the word can, if you can afford it, you can pay the full amount in one payment, which is called a reinstatement. Okay. They might offer that just, hey, do you have the money? And you say, yeah, I got the money. Hey, reinstate it. You don't have to worry about your loan terms being extended in the future. You don't have to worry about paying nobody back. When you sell your house or refinance, you're done. You got a lump sum. Somehow you came up with it, and you reinstated your loan. End of the story. Okay. And you start resuming making your regular mortgage payments every month. Okay. The next one is a repayment plan. So if you're back to work, everyone's back to work, and maybe you even got a raise in the meantime, and you have additional funds coming in, you can do a repayment plan. But that's really, really hard to do a repayment plan, because let's say you miss 6 months of payments already. They're going to take those 6 months of payments, divided by 12, usually, and tack it on top of your normal mortgage payment. Okay. Usually it doesn't make sense. All right. Sometimes you're doubling your mortgage payment. So that's usually not an option. Okay. Over here, if you cannot afford the reinstatement or the repayment, which most people will not be able to, all right, at the end of the forbearance, you'll be evaluated for other options to bring the loan current. Okay. So these are some of the options. All right. They can add the past due amounts to the end of the loan to be paid as a lump sum, or what they call a balloon payment, upon paying off your loan. And what we mean by upon paying off your loan, that's if you ever decide to refinance your home or sell your home. Okay. So that's the most common one. All right. That's what a lot's going to happen. They're putting it at the end. The other one Maria had mentioned before is extending the term of your loan in monthly increments to match the number of payments missed. So if you miss 6 months and you're at your 15th year of only owing 15 years, now you're going to owe 15 and a half years. So they're going to put the mortgage payments at the end of they're going to extend your loan terms, the amount of months that you were behind on the mortgage. And that's also a good option. Okay. Keep in mind, you're paying the extra interest and all that as well. Okay. So adding some or all of the past due amounts to your loan balance, and then making other adjustments, like extending the term of your loan, deferring a part of the balance to the end of the loan term, anything to try to keep your payments roughly the same. But what we're most likely are going to see are options 1 and 2, which is either they're going to add it to the end or they're going to extend your loan terms. Because there's less work for everybody, it just makes more sense. But usually they do that if you're back to normal income. Let's keep that in mind. Okay.
And it could be both of them.
Yeah.
Setting the terms and having a balloon.
Yep.
It depends on how much income you're making and how much do you owe.
Because at this point, you guys are going to probably have to submit paperwork, guys.
Yeah.
You're gonna have to submit in what income you have coming in. It's not, I don't think it's gonna be something automatic.
That's that you have to submit all your income.
And that's where we can help you too, you know, so keep that in mind. All right. If it's a little, if this process is getting overwhelming for you, once you start getting notices from the lender, reach out. Just reach out, pick up the phone, give us a call, and we'll be more than happy to help you with that process. Okay. If you were already behind on your loan payments prior to this crisis, and you cannot afford to resume regular payments at the end of forbearance, you may be eligible for a loan modification to bring current, okay? And some people were in the process of applying for a loan modification when this whole craziness hit, okay? And Maria has seen that people that were in trial payments, they couldn't even make those trial payments, you know? So what's happening now, Maria, for those, because I know you-
They were in trial payment and they could not do, they gave them the forbearance. That's why that forbearance, whether you were behind already, it's so important to request it, because what happened before COVID happened. It's there, it's written in stone. But what's happening now, it's all under the CARES Act, so it can be, they won't penalize you. So
So-
you, after it's over, you resume making your payment.
yeah, so you're gonna probably, they either gonna start the modification process again automatically, or you might have to reapply once you're done with your forbearance.
Most
Okay.
of the time, you will have to reapply or at least submit all the documents, because those documents that they had, they
They're
were old.
Yep. And by law, they have to have a,
Now you could be making more, you could be making less. So it's a bit different.
so keep in mind, you have to prove, you know, what income is coming into the household. You know, they're gonna ask for all that information online. Don't get frustrated if you previously submitted it before COVID hit, you know, because it's been 6 months. So all those documents are old. So you're gonna have to resubmit. And if you put up a fight, it's just gonna delay the process. And we tell that to our clients all the time. Don't be like, oh, I already submitted that. Why are they asking for it again? Just have it handy, because that's, unfortunately, that happens a lot. But you fighting it is just prolonging the process for you. So it's to your best interest. Even if you submitted it yesterday, that pay stub, and they're asking for it today, just resubmit it. No problem. Here you go. Here it is for the third time that you asked for it. Because if you don't, it's just, you're doing yourself a disservice. And I say that even with my first time home buyers, it's the same thing. It's all around. It's just not homeowners that are like that.
They tell you jump, just say hi.
Because you're trying to save your home. So you don't want to get frustrated during the process, and it could be a very frustrating process, guys, 100%. But you got to keep your cool, keep documentations of everything. This world is becoming, everything's virtual electronic. So if you can scan your tax returns and your pay stubs, your bank statements, have it scanned, keep it where you can easily hit a button and send it to whoever you need to send it, to try to keep the process moving as fast and efficient as possible. And like I said, reach out to a HUD certified counseling agency, because we keep all those documents. We're scanning them ourselves. Maria's constantly scanning and sending everything to the lenders. We don't fax things anymore. Everything is through portals, secure portals and things like that. Even to send stuff to us, guys, it's through a secure portal. We want to make sure all your information is secure at all times. That's why you can feel comfortable sending us. And if you don't feel comfortable uploading it, you can drop it off. We have a box, you drop it in, a little mailbox, and we'll be more than happy to scan it ourselves and do what we need to do with it. All right. All right. Next slide. All right. We have 2 frequently asked questions we added here. Okay. Which we might have answered already. Monthly mortgage payments that are reduced or suspended under COVID-19 need to be repaid. I think we answered that. Yes, nothing's free. So you are. So if you received a forbearance under COVID-19, you're going to be responsible for repaying it, whether it's going to be the lump sum, whether it's a repayment plan, whether it's extension of your terms, whether it's a balloon payment at the end. One way or the other, they're going to get their money back. But at least it's going to allow you to catch a breath of fresh air, relax, know that your home is safe, because yeah, you might have to add another 6 months to your term, but you are safe with a roof over your head, and you don't have to worry of coming up with 6 months up front, which most people are not going to be able to do. So don't get mad, oh, now my mortgage, I got to add another 6 months, a year, whatever it is. You see how time flies. Before you know it, you pay those 6 months off already. So don't give that so much mind. The next question, can I make payments during? Yes. And we encourage it. If you can make partial payments, pay it. It's less of a balloon payment, less of a term that's going to be added, less of everything in the end. So it is to your best interest to make partial payments.
You won't.
Yeah. And before the end of your forbearance period, your servicer should reach out to you. So that's why we say check your emails, check your junk mail in your emails, all right, in your spam folder, okay? And open up your mail, okay? Because a lot of people just avoid it. And pick up your phone. They might actually call you, old school. So pick up your phone. And if it's a telemarketer, hang up. That's what I do, you know. So, but you don't want to lose the opportunity to make sure you are informed of your options, that you're not missing out on anything, and you are saving your home that you worked so hard to get to begin with. But under no circumstances of your own, we have all been affected by COVID, one way or the other. So if that's what's causing you to fall behind on your mortgage, by all means, take advantage of what's being offered to you. Take advantage of the help that's being offered for free to help you get through this process. And this too will be over soon, hopefully. Hopefully we'll get back to normal.
Yes, we will.
So educate and prepare, okay? Do not panic. We tell our clients all the time, Maria tells them, don't panic, okay? If they're telling you to tell you paying back all the money at one time is an option, because it's not a requirement, okay? So at first, that's what they were telling people, and everyone was in a panic. Everyone's like, what's the point of me going on forbearance if I have to pay 3 months in full at the end? But thank God for the CARES Act. Thank God for some great people out there that were fighting for homeowners to end homelessness. They don't want none of that. So they put protections in place for all of us homeowners. Okay, so do not panic. Okay, the gold standard for forbearance is mortgage deferral. So most likely you're gonna get what we discussed previously, whether it's the end of the loan term, extension of the loan term, lump sum at the end, things like that. But you have to listen to what they're offering. You have to see what works best for you, and then go through that process. Okay. And let's see what else we have. All right. As you explore your options and make the right choice for your unique financial situation, talking to a housing counselor is the best way that we can develop a plan for restructuring your bills and managing your debt. We're going to sit down. Maria sits down with you. She's going over your budget. She's finding where things are going wrong, okay? Because some people don't take the time to see where their money is going. So it might be that you just have to readjust to be able to make that mortgage payment, okay? There might be things you might be spending a little bit too much money on that we're like, you need to rein it back so that you can make your mortgage payments. I don't know about you, but my hair can grow long and my grades can come out. I want to make sure I have a roof over my head. Okay, CVS, that's where I go. So I think we just have to, sometimes it's just us prioritizing, you know, needs and wants, and that way we can make it work. So Maria's going to go over budget with you. She's going to go over all your finances, you know, to see what we can do to get you guys back on track. All right. Our information is on here. I'm sure Marcus will give that information out as well. You can always go on HUD.gov and you can type in, it gives you an option to look up HUD counselors, HUD certified counselors in your area. Okay. And the next are our resources, which we promised we would share with you guys. All right. So if you want to look up your loan, these are some awesome resources you can go into and check if your loan is a Fannie, if it's a Freddie, if it's government backed, in the MERS system, it'll tell you straight up, yes, no. Here's also the HUD approved counseling agency. We provide the link for that as well. The Consumer Financial Bureau of Protection has some awesome information of all the most up-to-date rules, regulations, and laws that are in place. So that's a huge one that you can always go in. If you feel discriminated against, if you're going through your lender and they're not giving you options, you can file a complaint. You can do lots of things to get back on track. All right. And we also offer some additional resources here. Federal and state governments have announced plans to help struggling homeowners. So this is an article. It's a great article. So if you want to go on there and read that article, it's awesome. There's a video on the CARES Act mortgage forbearance, what you need to know. And benefits.gov is an online resource to help you find federal benefits you may be eligible for. So as you're going through this financial crisis, you might now be eligible for other things that normally you weren't eligible for before with your income. You know, there's a lot more people applying for, let's say, food stamps or just additional resources in general because they need it. You know, so if you need it and you can apply, by all means, you take advantage of all your resources that you have for you right now. And I think that was the end. Yes. So that's the end of my presentation.
Well, and I think a lot of individuals that are watching this are stimulated and energized to know that they have protection under the law and they have options. So I'm looking at a few questions. Now, there is one question that stands out, and so hope you guys can answer to this. Is there a fee for the forbearance?
There's no fee whatsoever.
And if someone requests a fee for this,
Probably a scam if they're asking you for money.
great,
The
great.
moment you're asking for money, guys, red flags should be
Right.
blocked every which way. Yep.
And I think that's just, you know, this environment, people are finding ways to be more creative with scams. And, you know, as the population gets older and home ownership becomes scarce, people are more inept to find or apply to any option that comes their way. So I think what you guys have expressed to us tonight, and laid out what options they have, like, I think people are more aware. The town of Babylon is grateful to you. Homeowners are grateful to you for this information. And whatever information that comes in after this video, we will forward to the Long Island Housing Partnership.
Yep. And we'll reach out once we get any referrals. Maria usually reaches out right away, just to see what the situation is. She'll ask some questions, and if it's something that we can help you with, she's going to send you out a packet that you would fill out and submit with paperwork so we can better assess and hopefully help you keep your home. The main thing here, I think, that everyone wants is for you to stay in your home, you know, and we're going to go through everything before not being in your home is an option. So we're going to help everyone stay in their homes. Maria mentioned it before, the lenders don't want your house. So if we can try to figure out a way to keep you there, we are going to figure it out.
Well, I thank you for participating in this event. We'll look forward to other events to partner with, hopefully, first-time home buyers, which is one of our programs that the town is. Right. So, but once again, I really do appreciate you guys giving us this pertinent information, and hopefully we can take heed and help individuals within the town of Babylon.
Definitely. Thank you for inviting us. You know, we love providing the information because unfortunately some people don't know that there is help out there. Usually Maria says word of mouth sometimes, and so getting this out there and this kind of, you know, live and if people can play it back, and it's awesome. You know, people can share it, you know, and get the information out there is key. So even if you're on here and you know somebody that might benefit from this, please, you know, tell them to go on YouTube, watch the video, go on the Town of Babylon website, watch it and share, because even if your neighbors are not telling you they're behind, they might be behind. So sharing is caring. So share the information. But
well, I just got, not to cut you off, I just got another question. Now, for individuals that were affected by the 2008 crash, still feeling effects from that situation. Now, fast forward, we're in COVID, how do they approach, how do they navigate?
So they went through it already in 2008, and now they're experiencing it again.
Right.
A lot of mortgage companies, Maria, correct me if I'm wrong, there's only a certain amount of modifications you're allowed. So if they only had, let's say they got a modification in 2008, most likely they're eligible again, but they have to keep in mind that their income and debt is what's going to determine whether they can get another modification.
Okay,
As I said, it's a GSE back, like Fannie, Freddie, FHA.
Okay.
Whoever gets a forbearance because of COVID, regardless of the amount of modifications they had before, they are going to work out with them.
Got you.
If it's not in a forbearance period and they just defaulted, never asked for it,
That's different.
Fannie, Freddie, they do have extra modifications that you have. That's it. Once you reach that amount,
Yeah. So if they're affected now because of COVID, they need to reach out because they'll be protected under this COVID, the CARES Act. So they can reapply, they can take advantage of it this time around and until they get back on their feet again. So even though they were affected back in 2008 and now they're feeling it again, they have the protection in place right now, especially if they have a government-backed loan. You know, definitely reach out to your lender or your servicer. The words have to come out of your mouth. I have been affected by COVID-19. That's all you have to say.
and
And
whether directly or indirectly, because I might not have had anybody, but the lady that took care of my kids, she can't. So now so whether it's indirectly too, it's the same thing.
it could be a border.
Of another.
Mhm.
Job closed down. They took off hours.
We have a lot of homeowners that rent. They either rent their basements or a room, and that person lost their income and are not paying the rent, and they rely on that rent. And the modification they got back in 2008, they use that rent as part of income. So that's an effect of COVID-19. So you can get back into forbearance and then try to do a workout afterwards. You know, so yes, that person can apply.
Thank you. This is awesome information. Once again, I thank you again. Um, all right, we're going to end this live. So have a good night.
Bye
Bye
bye.
guys, thanks for having us.
No problem.